This video is presented by Forex Trader Training.info. Ideas on how to become a disciplined Forex trader. Investors in today's world typically assume huge risks. Sometimes this pays off by way of big rewards, and sometimes things explode and people lose every penny. In the Forex market, in particular, over 85% of all investors end up losing their money. If you want to invest in the market, make sure you read these tips before you put your money into it. Beginners in Forex would do well to focus on only one currency pair until they understand how multiple pairs work. World currencies are very complicated and constantly changing in value. Forex is difficult enough to understand as it is, without having to keep track of multiple currency pairs. Pick one and study it. Try your particular nation's currency to start. Understand your personal goals and financial ability. Currency exchange can be risky no matter how foolproof the system may be. By knowing what you want to achieve and the realistic capital you have at your disposal, you can use the system smartly and lessen the risks that you take. Self-awareness is a key to success. Follow your gut instead of always taking the advice of others. Obviously, you are an intelligent Forex user because you seek out tips on how to improve profit. You will eventually be knowledgeable enough to form your own opinions about how the market is working. It is recommended to follow your intuition if you believe you see something others do not yet see. When trading, try to avoid placing protective stops on numbers that are obviously round. When you do have to place a stop, make sure to put it below those round numbers and on short positions instead. Round numbers include 10, 20, 35, 40, 55, 60, 100, etc. With trading, the only thing that you can be sure about is what is going on now. You should never add money to a losing investment. While the currency may go up, this is a gambling position that has ended badly many times before. Be smart with your money and know when to pull out. Forex fundamental analysis is a type of analysis involving the study of a country's economic situation. Political and economic events that happen in a particular country can greatly affect its currency market. Trading based on that knowledge will yield better results. For example, if a country raises interest rates, its currency will strengthen due to people moving their assets there, in order to get higher returns. Higher interest rates are usually determined by a high GDP figure, whereas interest rates may fall due to a trade balance deficit, or increased unemployment. By keeping an eye on these, you will know whether to trade that particular currency. You need to be sure about every single bet before you make it, and that goes for everything from playing that little $10 football pool on Sundays to trading currency pairs in Forex. The more you know about something and the more certain you are of the outcome, the better your odds of success become. Use what you learned here to increase your odds. This video was presented by Forex Trader Training.info.